Hello, welcome to a new video, and today we talk about 9 reasons why traders fail, and I will provide some tips on how you can fix them in your trading. So the first 2 points are having not a system at all or having an incomplete trading system. So when I talk to traders and I ask them what is your system or what is your strategy, and I just get an answer like I trade pullbacks or I'm a trend trader, and there's really nothing coming after that, and traders don't have an idea or have thought about more than just a basic term of what they're doing, it is really a big red flag. And you really need to be very clear about your trading approach. And first of all, of course, you need to really understand what it is that your system is based on, what is the premise of your system, what type of market are you trying to capture? Are you trading with the trend, against the trend? Do you do multiple time frame analysis? How do you do that? But, and this is where we come to the next point, a trading system is more than just defining how you enter a market. A trading system is a very complex thing actually, and it consists of, yes, of course, entries are one part of a system, but it's just really one part. You need to understand and you need to be very clear of how do you set your stop loss on your trades, and there are different approaches obviously. Are you an aggressive trader with small stops and tight stops, or do you like to give your trade and do you like to give the price some room and you use wider stops? And this will have a direct impact on your reward to risk ratio and also on win rate. And also you need to understand, how do you set your stops? Do you protect them? How many levels of or how many layers of protection do you give your stop loss? You need to be very clear about this. Also, the same applies to targets. How do you set your targets? Just a fixed reward to risk ratio based on the stop, or are you using flexible targets? Do you scale out of your trades? Do you scale into your trades? How do you do that? Don't do it just randomly, but really write it down. How do you manage your trades? Do you move your stop loss behind price, or you don't do that? When do you do that? How do you deal with news? How do you size your positions? How do you deal with correlations? And so on and so forth. There are many different parts of a trading system that traders often neglect, and this is where many problems come from, because what happens is then, okay, let's assume you have spent all your energy and time on just defining how do you enter your trade, but then once you are in a trade, you lack confidence and you're not really sure what to do now, how to react when the price goes against you, how to react when the market doesn't do anything and it just sits there at your entry, how do you do, or what do you do when the market moves in your favor? And traders who spend all their time and energy just on looking at entries alone, they don't have confidence, and many traders report that they just don't feel confident. And one of the main reasons is because they either have no system or an incomplete system. And you can fix those by really either take a piece of paper, write it down in a worksheet, wherever it is, but really write down all your rules for all the different parts of your trading system. That's really important. Also, you could just start a screenshot collection. Take the best trades, or just take screenshots from the best trades or the best setups that you found that makes sense to you, print them out and look at what do they have in common, write it down and use that as your orientation. But you really need to remove as much uncertainty as possible, and you need to have as many rules and as clear rules as possible for all aspects of your trading. Number 3, bad risk management or inconsistent risk management. Some traders don't have any risk management whatsoever, and what I mean here is that you just size your positions in a meaningful and consistent way. You need to really have a consistent position sizing approach, otherwise you give all your trades a different weight. If traders don't size their positions in a consistent way, then one trade will have a much bigger impact on your account than another one, and this should not be the case. Your trades should have an equal and roughly similar outcome on your trading account. If on one trade, for example, you lose 500 on US dollar and on the next trade you only lose 50, but the stop loss and everything was the same, but you just sized your position differently, maybe you have no position sizing approach whatsoever, then this is really a big red flag, because you will give different trades different weights, and this is not how you should be. So really be clear, okay, what is the position size that you want for your trading? Is it 1%? Is it 0.5%? Is it 2 or 3 or 4 or 5%? Whatever it may be very crystal clear about that. Set it, write it down, and then determine, okay, how do you determine actually how to risk 1%? And you need to have your stop loss position, your stop loss size for that. How many points or pips is your stop loss? And then also the pip value. And then you can figure out how many lots you have to buy and sell. And many traders skip this part because they are lazy. They're not professional enough. And they just always use, for example, or some people, they say, I always risk 0.5 lots, or 1 lot, or 2 lots, or whatever. But if you always keep your lot risk constant, this is really bad, because usually your stops will vary a little bit, and also the point value will vary based on the instrument, and this means that your position sizing will be inconsistent. So there are many position sizing calculators out there. Just type in position size calculator, and it will show you exactly how to size your positions the right way, so that you have consistent risk management. Wrong expectations. That's one of my favorite points, because many traders miss this. And it all starts just with the question, what is profitable trading for you? What does profitable mean for you? Think about this. Do you know it? Many traders say, I want to be a consistently profitable trader. But what do those terms really mean for you? And you need to be always very crystal clear about what you're working towards. Otherwise, you have no way of reaching it, actually. Because what is profitable trading for you? Is it 1% a month? Is it 100% a month? What it is that you are actually working towards? What's your goal? And you need to define that. And also, obviously, you should have realistic expectations. It's not really realistic if you want to have a trading career to make like 2 or 3 or even 100% on a year-to-year basis. That's not realistic. If you look at long-term performance of successful traders, maybe even funds or fund managers, you will see that the biggest players, the ones who manage millions and billions, they make 20-30% a year consistently, maybe even 15 or 10, but they make it consistently. They don't have big swings in their trading. And that is very important. And this brings me directly to the next point. We can do those together, having a short-term mindset. Many traders approach trading with a short-term mindset, where one of my favorite quotes by me that I often post on Twitter is that many traders say that they want to trade for a living, and they say they want to have a very long-term trading career, but they approach trading and then they trade actually like they have to retire tomorrow. This is very bad. And just be clear, if you want to do this for the next 10, 20, 30 years, how does your approach have to change? Do you really have to take all the stupid trades that you shouldn't take? Do you really have to risk all your account in a week? And do you have to blow up your account all the time? No, obviously. But how is your mindset and how is your approach going to change if you really want to approach trading from a long-term career and long-term perspective? Things really change there. And in today's world, luckily, we have so many options. There are services out there where you can trade other people's money. You don't have to be regulated most of the time. You can just sign up for a service. They are even free, not those online prop firms, but there are other services where you can sign up. And if you can prove that you make 10, 20, 30% a year consistently, there are traders who have millions and millions of allocations. And just ask yourself, how likely is it that you can make 1 or maybe 2% a month? Could you make 2% a month consistently? In comparison to what most traders want to do, they want to make 20%, 30% a month. And how realistic is that they can achieve that? But once your expectations change to something realistic, and once your expectations change to a long-term mindset, your whole trading game and your whole view on what trading really is will completely change, because you're not chasing those stupid things that you see on Instagram or social media. You're not going to be a millionaire in a year or two. I can guarantee you that. No matter what you read elsewhere, it's not going to happen. It has never happened. It will never happen. And if you chase those wrong goals, you will waste years and years of your life, whereas you could have used those years to build a long-term track record, and you could have much, much more fun in the meantime, because it's very, very frustrating, obviously, when you try to chase 200 or 300% a year, and obviously you will never make it. But if you have a goal of, okay, my expectation is I can make 1.5% per month, I can make 2% a month, and I have a long-term mindset, and I know that if I do this for the next 2 or 3 years, I will have a very, very good track record, and I will be able to attract millions and millions of funds of other people. This is a much, much more realistic approach, and this is also an approach that is actually achievable. You can do that, I guess. Ask yourself and really define what is profitable trading for you. This brings us directly to the next point, a small trading account. There's really no point in trading if you have like 100 or 200, 500 US dollar trading account. Of course, it also depends on the previous 2 points, expectations and short-term mindset. You will not be able to live off a $500 account. I can guarantee you that. You won't be able to live off a $1,000, even a $2,000 or a $3,000 trading account. It's not going to happen. So you really need to completely transform how you view trading, how you approach it, and what is your long-term expectations of trading. And if you can understand, okay, I have a $500 account, I don't expect to make money off of my $500 account. I'm not going to expect to feed my family, buy a car, have vacations, and pay all of that from my $500 account. But the $500 account, I don't care about the money. What I care about is making 1.5% per month, steady return, no big risks, no stupid trades. I can do that, and then in 3 years, I have a solid track record on any of the services. There are many, many out there. You don't have to pay anything for them. And you will have put yourself in a position where you have really approached trading from a realistic mindset, from a professional mindset, and you have put yourself in a position where you can actually win instead of just chasing this dumb stuff that you see everywhere on social media. It's not going to happen. I can guarantee you that. 7, no feedback loop. This is something that many trade, or I almost seen very few traders do that. I know if you do that, especially when they are with Tradeciety, because they know how important it is. And having a feedback loop, what does that mean? It means that you have no way of reviewing your last trades. Ask yourself right now, do you remember your last 20 trades? Do you remember for your last 20 trades what you did right, what you did wrong, what were the mistakes that you kept repeating? What are the common issues in your trading? When did you break your rules? How often did you break your rules? How much did it cost you? How did you manage your trades? Was it effectively? And do you know that for the last 20 trades? Do you know that for the last 50 or 100 trades? Probably not. I, of course, cannot recall it. I think most of you will probably answer it with no. But this highlights the importance of that you really, really have to have some type of a feedback loop in any area of life. If it's business, if it's school, university, studies, athletics, whatever it is. If you don't review what you have been doing, how can you expect to become a better trader, businessman, athlete, person, student, whatever? You need to have a way to review what you have done so that you can learn from your mistakes. Having a review process is just so important. And if you don't have a way of reviewing your past trades, there's absolutely no chance that you can become a profitable trader, that you can improve. Let's not even talk about profitable. You will always be a failure, and you will not even see slight improvements if you not have a way of reviewing your trades. This should be your top priority, and it is so easy to do. Whatever it is, you don't need to have edgewonk, although of course I might be biased, but there is obviously no better tool. But even you can start with collecting screenshots of all your trades. do that, file them somewhere in a folder, and then once a week just review them. Take a few notes and look at what are the things that you kept repeating, what are the common themes in your trading, and then change that. System hopping, all of those points that we talked about previously, they lead often to system hopping. System hopping means that you just jump from system to system to system, you change your rules all the time, you change the tools all the time, and you just are hunting for the holy grail, so to speak. That's how most people, how most traders call it. You just want to hope, or you just hope that you are stumbling over a trading approach or over a trading system that just somehow suddenly just works and you can start printing money. And this is not how trading works, obviously. And traders who are system hopping, they're doing it because obviously they have wrong expectations. They don't have a system to start with, or an incomplete system, which they then cannot analyze. They have no way of analyzing their approach anyway, because they have no feedback loop. And this all leads to system hopping, because you don't even really know what you are doing. You don't even know what you should be doing. And this is very frustrating, obviously. It is a lot of uncertainty. It is very stressful. And if you don't have this approach or this mindset where okay, I need to have a complete system. I need to write down all my rules. Everything that I do needs to be defined. I need to have my expectations in check. And I need to have a feedback loop. Then you don't worry about finding a profitable system that will just somehow suddenly stop working. But you understand that it's not about finding a system, it's about making the system that you have work. That is the number one priority, and that's the only way really how profitable trading works. You can give any good trader any system and he will find a way to make it work. You can give the best system to a bad trader who doesn't know what he's doing, and he will certainly lose money with it. That's a guarantee. So you really need to understand that you need to stop system hopping. You need to have everything else in place for your trading, and then you will understand that it's not about finding a better system, it's about making the system that you have better. And it's also about turning yourself into a profitable trader, into the trader who can manage himself, who takes care of himself, who is disciplined, who puts in the work. And this brings us to the last point, a lack of professionalism. Professionalism, very hard word. But yeah, everything what we've talked previously, if you are not doing this, it really shows that you are not really serious about trading, that you are not professional enough, that you don't give trading the seriousness it deserves. And you can ask yourself, do you really expect that the way you have been trading, the way you approach trading without rules, without knowing what you're doing, without risk management, just gambling, hoping that you somehow find a new system, is this really how you will provide for your family? Is this really how you want to do, how you approach your life for the next 20 or 30 years? Do you really expect that this will put money on the table and food on the table for your family? This is how you will build your retirement. That's how you want to build a car, a house. That's how you want to provide for your kids, how you want to send them to school. Are you really serious enough about trading? And of course, many traders will be a little bit offended, or will be at least a little bit put off by this question, but you need to really pay attention to reality. You need to pay attention to what is happening in front of you. You cannot close your eyes in front of what is real, what is happening right now. And if you see that your account is going down, that you have no way of actually seeing any improvements, and that you just keep repeating the same things over and over again, it's time really to open the eyes in front of that and for that. And it's really time to change something about that. So you really watch this video again, write down all the points, and really think about it. Write down your thoughts, write down your approach, what is it that you want to change, and really change it in your trading day to day, and approach it from a different perspective. And then you actually have a shot of making it as a trader, seeing improvements, having fun at the same time. I talk to so many people and they're just frustrated because they don't actually know where they're going and how to get there, and it's all very stressful and just failure and failure and failure. And that's not how you want to approach trading. It can be fun, and it should be fun. Otherwise, why are you doing it? So I hope this video helps. Let me know in the comments below, and until the next time.